Good day, traders. How we doing today? By the looks of this, not too good, huh? Not too good. That's why I kind of don't trade NASDAQ or Dow but I cover it here in the video. There's setups, but they can be difficult. Yes, they can be difficult. So anyway, this is the 5-minute. I'll show you the trade on the 5-minute. It actually worked out, but you went through hell to get what you're, what you're hoping to get, what you're looking to get. But the divergence is here. Okay, right here is 930. This, body candle with the wick on the top and the wick on the bottom. So this trade was 5 minutes after the stock market opened today. We have a low and a lower low. And we have that on the indicator. So we would have got in right here after the first 5 minutes. Let me just show you. See 1630 at the bottom there of that crosshair? Oh, now I'm getting the hiccups. I just had a little itsy bitsy bit of water. Okay. So we would have gone in right on the opening of this candle. Okay. So if you bought right there, right away it went against you 21 points. Then it came up and you had 20. But the stop is 30. See right there, 30. 32 on. It's a little weird on the MetaTrader. So we're looking for 30 pips, okay? And did we get it after all this chop shop? We did. Right there at R2, D2. Okay, so you would have got your 1-to-1 right there. And as you can see, it went back down and it's chopping some more. Like I've told you so many times, it's not that I'm saying, you better do this or la, 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 la. No, 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 no. I just tell you from past experience that if you go for whatever the risk is for your stop, you go for the same for your TP, and it usually goes there. Not always, but it usually goes in your favor anyway. Within sometimes it'll go, about a couple pips just before you take profit. Sometimes it'll only give you half of the amount of your take profit. You gotta manage the trade after. Okay, that's the whole key to trading is managing your trade. It's just like as if you trade with, say, 2 contracts. Say we're trading futures. Okay, so you do it where you get in the trade. Your stop is down here at 30 points or ticks. Okay, if you're gonna go for a 30 tick take profit, so you got to have it somewhere where you gain so much. You would take, like, say you did 60% of I'm all mixed up now. I'm sorry. No, say you hit your target. You'd have one set for your target. Okay, one of your contracts would be set for your take profit, 30 points, 30 ticks, and then once you hit that, which was right here, you would set your stop loss to break even. So if you did that here, you would have got stopped out. But anyway, if it didn't come back and stop you out and kept going, you'd move your stop to break even or one tick or 2 ticks to cover expenses, and you would have made money on the first one, and the second one you're hoping to let it run, but it didn't run, but you got out at break even. So yeah, that's the way she goes. A lot of traders do it that way. Anyway, we do have, no, we don't have. No, I thought we had divergence here, high and higher high to sell it, but we don't. Okay, it's a mess on the Nasdaq right here. Holy jeez, I'm stuttering up a storm here today. Sorry about that. I used to be better, but I told you what happened. Okay, injured from Vax. So let's move on here now. This is all. No, this is the S&P. What did we get with the S&P? That's not a trade here. This just went down and it's went down. There's no hidden divergence here either. Oh, actually there is. I'm sorry. It's right here. How could I not see that? Okay, and from right here to right there. See, this one's going up. This one's going down. We would have got long right there. And that was at 9:35, 5 minutes after the open of the stock market. Okay? So you would have got long here. Here's an example, okay? So you would have got long here. Your stop would be 5 points. 5 points. Okay? So you're doing 2 contracts and you went up 5 points. So you would have closed your first contract at your 5 points. Your second one, you're hoping to let it run, okay? And get you another 20 points or whatever, right? So at this point where you took profit on your first contract, your second contract still open, it would have just missed it. Your entry point is right there. Look how close it came right here to close your second order at break even. So let's say we didn't get it didn't hit our break even on the second contract. So it would have kept going and going and going, and then that's where you look for places to move your stop up. Like when it went up here, let's say right up here, okay. Then you could move your stop loss from break even right here. You can move it here from being up here. Then it goes higher, higher, higher. You slowly move your stop up, okay? So then on the second one, say you moved your stop up to there, okay? Or even there, let's say. Well, we would have got 7 points on the second trade, second contract, because we would have kept moving our stop up and we would have got stopped out right here with this dip. Okay? Just wanted to say that to you, that's how some traders trade. Because once they take the profit on the first contract, they're good. They're locked in for profit. You know what I mean? But did I ever tell you I'm not a financial advisor and this is for educational purposes only? It's not for entertainment purposes only, because that would mean that it was not serious and it was something funny. I think that's funny. I noticed that yesterday, that some of them say, "Oh, this is not for educational purposes, and this is not for entertainment purposes." Why would they put that? I don't know. It's definitely not, and this is definitely not like a childish game or anything. You know what I'm saying? This is finances. This is real. This is your hard-earned money on the line trying to make a profit in the trading business. So whatever you do, don't ever look at it as entertainment, even though we have some real clowns that are doing, their live stream. You know what I mean? Okay, I'm just showing you a money management technique and how you do it with 2 orders, and that's it. I'm not saying to go do it. I'm just sharing the educational part of it. because I am not a financial advisor. Okay? Okay, let's get back to this. So, anyway, let's show you the two lower close, buy it. Oh, here's one here. Lower close right here, buy it, up it goes. Okay. And then we have another lower close, buy it right here, up it goes. And we have one more up here, okay? Which would have been right there. No, that's got to be there. Oh, yeah. There. We have the lower close candle right here. We would have bought it here. We would have had a little bit of drawdown into here. And then it went up. This is the S and the P. So you had 3 scalp trades, and you had the divergence, hidden divergence right here, which I call it hard to see divergence, because they're hard to find and they're hard to see them. Okay, let's look at the Dow now. Oh, look at the Dow. Wow, 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 wow. Dow, 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 Dow. Wow. And it just so happens to be hidden divergence. Can you believe it? But before I show you that one, I want to show you this one. High and higher high, and there's the divergence, okay? And here would have been the, yeah, it's right there, man. The entry point was right in here on the opening of this candle. Your stop would have been 20 points. It went up 17 and a half ticks. 17 ticks, whatever it is. You didn't get stopped out, but boy, it would have scared you. And down it went 60 points. Okay. Now, the hidden divergence is right here. Right there like that, as long as it's lower than here. And right here. It's right there. See, one's going up. This one's going down. Would have got long right in there. Stop would have been 52 points. This is the Dow. 52 points. And you would have hit that 50 points right there in about 10 minutes. And if you're going for 2 to 1, you would have hit it up here. Okay? And we had some more lower close, up it goes. First one was, see these two? They're too far away from the 5. There's no buy trade here. But you see this one? Once this candle opened, it was very close to the 5. That's a trade. Lower close, buy it, up it goes. Here's another one right here, see? Lower close, buy it, up it goes. All right, 3 successful trades on there. Let's look at the pound dollar now. What did it do for us today? I think we have hidden divergence also. Oh yeah, it's right here. It's right here to right here. They're all basically the same trades today. Yeah, that's what I thought. That one goes there. See the hidden divergence? One going down, one going up. You would have waited for the 5 to cross above the 7 and the price to close up above those 2. Very important moving averages that a lot of traders will laugh at and think are stupid. They're not stupid to me. Depends how you look at them. Depends how you read them. And that's it. Entry would have been right there. Very plain, very simple. Right there. Get in long right there. And it went up 37 pips on the pound. Okay? And there's some more lower close. You know, I'll put them on. Right there, it's a perfect one. Lower close, buy it, up it goes. Lower close, buy it, right there, up it goes. We just need to show you those two. There's the two successful trades. 3 of them. 2 scalps, and yeah. And the divergence, the hidden divergence. The euro, what did we have? You can also look at the 15-minute, you know. Yeah, there's hidden divergence on the 15-minute. Let me show you. You can trade this on any time frame. 1 minute, 5 minute, 10 minute, 15 minute, 2 minute, 4 hour, daily, weekly even the weekly. You'll find divergences on all time frames, ladies and gentlemen. Okay? It just depends on, do you trust them? Do you want to trade them? Do you want to take them? That's a decision you have to make. I show you them day after day, how they work so well. You know, yeah, it is what it is. Somewhere in there. And you would have got long right in there. And up it went, 26 pips on the Euro USD. And then we had a lower close. See, this candle, it wasn't valid yet. It wasn't valid on this candle that rose up. It was valid on this one that came down and closed on the 5. Okay? And that made it a lower close. Buy it. Up it goes. Look at these ones up here. Yeah. These beautiful trades up here. Lower close. Buy it. Up it goes. Here's another one. Lower close right here. Buy it. Up it goes. Beautiful, huh? Yeah. A lot of chart staring. I discovered these lower close candles to buy. They work so well. Like, they tell you right on the money, like, when to do it. So much better than trying to follow it. And like, say I put some other moving average cross or some other kind of indicator telling me, oh, you know, it's a dip now, buy. They'd all be lagging. The best thing to read is price, the current price. What is it doing? See right here? That's the best thing to trade because it does not lag, because it's the current price. And the current price is moving. Oh boy. I'm sorry about that. The Hockaloogie Boogeyman is here. Yeah, I got something stuck in my throat and it won't come up. Shit. Okay, I got rid of the boogeyman. Okay, that's good. That's it. That's good. That's all. Okay, let's move on now. Pound yen. Oh, pound yen. Chop, 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 chop. But we have a double top right here. And that going down, see? From there to there, there to there. I'm not going to put a line on. The line's there at 184. Okay? This is the pound yen, ladies and gentlemen. So where would have we got short? Well, let's see here. Say you want to be sure that this is going to work, okay? You don't want to sell it here. You don't want to sell it here because we have major support in there, see? You want it to break and close below this, all this jibber jabber noise crap shit storm in here, okay? So what would you do? You'd wait for this very strong bearish candle to break and close, break below the support, and close, break and close below the support. Then you would have got short. This is part of my pip snagger analysis. It's like any analysis. You're trying to get on the right side of the consolidation. And we were on this side because we didn't buy it up here because they already sold it off here 4 times. You wouldn't be looking to buy it here. If you were, well, good luck to you. This is the clear picture right here. This candle that closed lower, which would have got you short on the opening of this one. So if you got it in on this one, your stop would be 34 pips. Did we get 34 pips? Yeah, we got 50 pips. Okay, that's our pound yen trade. Let's look at the euro yen. Did it give the same thing? Oh yeah, kinda. Kinda. And we have like that. And right here on the indicator, we have it like that. See? One's going down, one's going up. So what is that? That's hidden. See, and you can also draw a line like this. Once you get a, because there's lots of, can't talk. There's lots more support right here and in here. So if you draw a, like a trend line, this is like a trend line break. We broke it and closed below this trend line. This is where you could draw a trend line, you see? Yes. Some people think trend lines are bullshit too. No, they're not bullshit. But anyway, everybody has their own opinion in trading, right? What works for them and what doesn't. But like for one person, a trend line break won't work for them. They got to do something else, right? And for another person, a trend line break and close below the trend line will work for them. So anyway, on this trade here, okay, we would have got short right here. I know I'm not usually drawing these, support and trend line support and the break and closes of them, but I wanted to show you that today. It's part of my analysis sometimes. Whatever I see on the chart, right? If I see where I can draw a beautiful trend line, like right here, I'll draw it on my chart and wait for it to break and close through it. Same if there was like a lot of support, like right here. See, right here. I would wait for it to break and close below this to get in my trade. So anyway, would have went short right here. Stop was 20 points. Did we get 20 points? Oh yeah. We got 36 points down to here. Let's move on now to gold. Oh, look at gold. Gold was a trender today, back up over 2,000. Oh, I think we're already up over 2,000 anyway. Look at that, a run, a 1, 2, 3, 4. In 20 minutes, it went up 120 points. Okay. Let me show you the trade. We have a low and a lower low here, see? And on the indicator of choice, it's going up. Yeah, right there. One's going up, one's going down. What does that mean, ladies and gentlemen? It means we have a trade. Right there's the entry. And up it went. 140, 150 points, you might as well say. But from our entry point, it went up 145. And we have a little lower close, buy it here, and up it goes. It's right there. Okay, let's look at the last one of today, which is oil. All right, what do we have with oil? Oh, whoa, 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 whoa. Okay. Here we could go low and lower low, right? Low and lower lows. Yeah, we could. But it's not divergent because over here, this needs to be higher and it's lower than over here. So there's no divergence to buy right here, okay? However, we do have a close below the moving averages and then a smack up, and you would buy it right here. It's also a lower close, buy it, up it goes. You got two things confirming to buy it, okay? We'll just put on this one. Well, no, we got to put them all on. We got to make it look all fancy here now. Here's the smack up. Here's the lower close, buy it, up it goes. I have that in the wrong spot. And I can't pick it up. Oh, there it is. Yeah, that needs to go right there. Lower close, next candle opens, buy it, up it goes. Oh, here's one more. We'll put one more on. Excuse me, boogeyman, come back. Okay. Right here. See, here's the smack up. It went up like 80, 90 points up there. Here's the, lower close, buy it, up it goes. It went up 50 points for you. Here's the smack up. Here's the two lower closes, buy it, up it goes. It goes. Oh yeah, that's really an English word, Jason. Okay. The trades were successful, ladies and gentlemen. We also did have hidden divergence, and I want to point it out to you, okay? Which went into here like this, and like this, to wherever it goes. Here, there. Yeah, right there. And you would have got long up here, ladies and gentlemen. Yes, indeed. Right there, you would have got exactly right there, you would have got in the trade. On the opening of this candle with the arrow underneath it. Oh, yeah. It went up 54 points, and the stop was only like 30 points, 28 points. Doesn't that look beautiful? Those things I put on the chart and how I point to them and talk and explain everything and what they represent and what's going on. And that's the way it should be. So you understand that I'm trading actual strategies, ladies and gentlemen. If you go on other streams and they're not telling you what they're doing and they're just going, oh I'm going to buy now. This is looking good. That's not explaining to you, the strategy of what they're trading. And I'm not saying this in a bad way to any traders. It's just that they don't really have much of a strategy, most of them. They're just guessing. And that's one thing that I guarantee you, because I know I've done it myself. Everything I talk about, whether it's good or bad, I've done it myself. And I've done it more times than I want to admit to. Okay? So, I was the kind of person, oh yeah, I'd see it coming down right here, these bearish candles, I would sell here. I wouldn't buy, I would sell. And what happened? It would go up and I'd lose money. Just like right here. Oh, look, it's going to go down now. It's going to go down. And I would sell here. And it would go up and I would lose money. Especially this one right here. Oh yeah, I would have got really sucked into something like this right here. I would sell it like right here, and it would go in my favor, like 20 points. Do you think I would take it? No. I think it's going to keep going down here. No, and it keeps going up, and I'd lose money. And I would lose money. And I would lose money. That's why you got to have a plan. You got to have a strategy. so that you can not lose money. Did I ever tell you that I'm not a financial advisor? Yeah, I think I told you. Anyway, I just try and be funny about that, even though it's serious stuff to trade. It's not an entertainment. It's not like a rush, like an adrenaline rush. Um, but I want to tell you something that's very true, and a lot of traders probably never thought about it until they've actually done it. And trust me, I've done it. You know what's more exciting than making money in the market is losing money and chasing it, trying to get back what you just lost. There's more excitement in that than actual all other trading. And that's what a lot of traders do, and they don't realize they're doing it, and they just keep losing money. Sorry to say. I know, I've been there and back more than 100 times. So many times it isn't funny. Like I tell you, I've been trading since 2001. Very long time. But anyway, I hope you learned from some of the things that I've shared with you today about, using two contracts to do your order and hitting the TP on the first one and then moving your stop to break even on your second one, or you lock in a few points, ticks, whatever. Also about there's more adrenaline from trying to make your money back than there is to try to make money, let me tell you. Let me tell you. Okay, it's very crazy how we're all human and we all have psychological fears, and this is what messes us up in trading. And that's why you need to trade the smallest amount that you can trade so you feel comfortable when you get in the trade and you're not automatically in fear and going, "Oh my God, oh my God." You can't do that. You got to be calm. You got to be cool. You got to be collected. Otherwise, you're going to have bad days. Like a bad hair day? Yeah, you're going to have bad days like a bad hair day. Anyway, that's it for today. Thank you so much for listening. Thank you so much for watching. I appreciate all of you so very much. So please hit the like button if you like what you heard and seen. And if you haven't subscribed, please subscribe. And I want to say thank you to all my latest subscribers. I appreciate you. I hope you all come back tomorrow. Okay? All right. Good luck and good trading.